My mankind's already. Hey, we're live. Sorry, I was already looking at how my picks are already. We're 1 minute into the race. I just saw my mankind go up 0.55%. I'm a winner. Hey guys, it's George and Alan. I'm George Cholas, founder of Agoracom. With us as always, Alan Berry, our chief market commentator. Alan, say hello.
Hello, everybody. We got a great show for you today. Today, it's the big battle between George and myself, a big stock picking contest. Remember back in December we did this, and we picked some stocks, and I became the victorious champion.
So let me give everyone some details there. I'll actually give them details on the screen share. Where are we? Let me see.
Tell them how badly you lost.
Right there. So you should be seeing, right? Alan tapples George.
Oh yeah.
All right. So this is the contest that we had. This is the first contest that we had. This is our tax loss selling competition, where we pick stocks around December 20th, and we had them go until the end of January. And I put a pretty great performance at 33.2%, but Alan kicked my butt with 47.5%. So he is the reigning champion right now. And then we also made another bet. So you're going to see this. And challenge. Just back in the middle of August, I made a huge call on Twitter saying it's going to be a double. I bought it at 44.06, and Alan said he was going to match me with BlackBerry at 9.59 because he thought that was going to be a bigger one. So put that all together, and what we've got here is, I'll take the screen share off, and what we've got now is this is what we call our August week. It's almost like tax loss selling part 2 in August, where stocks, especially in the small cap space, are really weak, and you can usually pick up some great bargains. And we've got a competition where we've each picked, again, 5 plus a bonus stock. It's going to run for 2 months until the October 31st Halloween night. Bragging rights are on the line. So, without further ado, let's go through the picks. And because Alan is the reigning champion, I hate saying that. I hate saying that. But because he is the reigning champion, I'm going to let him go first. So I'm going to bring him up on my list here. Mind you, you might have to bring him, Alan. In order to show them, you might have to bring them up on your list there. I've got to. So I'm gonna put them up here for a second. You should be able to see my screen, Alan.
Now, we're gonna do the charts and go over why we picked them and everything too, right?
Yeah. So I'm gonna tell everyone quickly the list of Alan's, and then Alan, you can get your charts ready. So Alan's gonna go with Klondex Mines, which is KDX on the TSX, Dalradian, which is DNA on the TSX, Nevada Sunrise, which is NEV on the TSX Venture Exchange, Rubicon, which is RMX on the TSX, New Gold Inc. 1, 2, 3, 4, 5, 6. Actually, and BlackBerry doesn't count. New Gold Inc. NGD on the TSX, and finally, a little bit of technology, BSM Technologies, which is GPS on the TSX Venture Exchange. So if you could notice a theme already, Alan's gone very heavy on gold, and I actually stayed away from gold. So one of us is going to get slaughtered, and one of us is going to look like a superstar. So Alan, why don't you go quickly? So let's take like a couple minutes. Let's take a minute per pick, or a minute or two per pick at most. Why don't you start with KDX Klondex Mines?
Okay, so before I get going, George, yeah, you know that thumping you took last time, it was pretty severe. 47% from 32%. It's very similar. I like to put it all into horse race context, right? It was like I was at the finish line and you were still halfway down the stretch. So I'm going to
cut me deep. You're cutting me deep, Shrek.
But that's part of the fun of the contest. So now we'll get on to this contest. And I've really set myself up for either another big victory or I think I could have a stunning defeat. What I mean by that is I'm 5 of the 6 picks. I'm going with our gold picks. The reason that I've done that is I think that gold is very oversold right now. I think that the gold stocks that I picked are even more oversold. As we get into this early fall, you start seeing stronger demand for gold because the season, it's the wedding season and holidays in India, and that's a big time of consumption of gold. So I'm optimistic that we're going to see gold get stronger. You know, I'm not talking $2,000 gold by the end of October or anything like that, but I do think we might be north of 1350, maybe even trusting 1400. If we do that, I expect to be another stunning victory.
No chance. If it does that, I don't know what I'm going to do because I can't name some here. But, hey, Alan, if gold didn't, and I'll take off the screen share. But you know, here's why I'm going to hit you. If what we had over the summer, Russia attacks Ukraine, one of those two actually shot down Malaysian Airlines. The Israelis put boots on the ground and went into the Gaza Strip. Added a little Ebola. You couldn't have had a worse geopolitical summer than we had. And if you told me all that 3 months earlier, I'd say gold's at 1450 in a blink. And it didn't participate. So if it couldn't move there, why is it going to move now? That's why I'm challenging it.
Because like you're one of a crowd of people that think wrongly about what moves gold. You guys still think that it's geopolitical. I think that it's all supply and demand. So here's the perfect example. You just named all the reasons why gold didn't move a bit when it was geopolitical related, and now we're coming into the season where the demand is stronger. So we'll see what really moves gold, and I think it'll be supply and demand, and the strong season for holidays and weddings in India. They'll demand gold strongly again, and we'll have a good run between here and the end of the year.
Listen, no doubt supply and demand plays a role, but one thing I know about all commodities is all the big hedge funds around the world play a role too, and they either pile into a trade or pile out of a trade, and they have a significant impact, and they go with the way the wind blows. They have no allegiance to long or short. They don't care. They just go the way with the wind blows, and I didn't see the hedge funds participating, so I think you got a bigger uphill battle than you think. So go on to Klondike. Show us a chart there for KDX.
I'll carry him on my shoulders. Yeah, my first pick is Klondike. This goes with my gold theme. I'm just going to bring up a screen share here so you all can see my my screen. I'm a big fan of KDX, a lot because of what they're doing down in Nevada. They got really good gold projects down in Nevada. And I'm looking at the chart here. This is the kind of chart I'm looking for a breakout. It's been going sideways. I call this a little bit of an upwards bias. I like the way the MACD is looking. It looks to get more positive. You're now trading at a convergence of the 50 and 20-day, 20-day and 50-day, and it's still staying above that 100-day. So those are the reasons I like my my pick KDX.
Not bad, not okay. I don't see anything dramatic coming out of it, but safe as your first foray into this as you dip your toe. Next up for you is Dalradian, DNA.
All right, DNA. I had to get a little bit. You got to sometimes you need a little bit of luck in life too. You can't always rely on your extreme wisdom. Sometimes you have to have a little luck. So I got the Irish luck here in DNA. DNA's in Ireland. They've got a project in Northern Ireland. They've been doing very well. You go back here to December, they were trading at around 54 cents, traded well over $1. Been really kind of going sideways since back in the beginning of the summertime. But I'm looking for a breakout with this in along with what's happening with gold.
I like that Dalradian. I do. So there's no doubt I'd like that pick. The weakness of picking them in a stock picking contest is they do get a lot of peaks and valleys. So as a trader, I'd love to pick this up, wait for a spike over $1, take my money and go. As a contest, you got to be hoping that October 31st they close on one of those peaks and they haven't peaked early and have maybe have come back down. So, but otherwise, a good company and a great pick if you didn't have that timeline. Next up, Nevada Sunrise, NEV. This is the one that worries me right here. This is the one that could put you over the top.
I don't blame you for this one worrying you, George. This is one of the most exciting new discovery plays in Nevada. They're involved with Pilot Gold. They've had a great run here when they made the discovery. It was trading up. Now, these guys own 30% of the claim, and so they're not the majority partner, but they've done very well. They were trading here at around 19 cents when the discovery was made. They've traded all the way up to $1.49. It's been really soft this summer, but they're coming into a good a period of drill results. I think that this stock is very oversold. I like that the MACD looks like it's ready to got a chance to start going in the right direction again. So we've had a good run. We've had some pullback and profit taking. It's maintained. It's now trading right around this old resistance here. I would have liked to see it trade a little bit stay a little bit above that, but the MACD gives me confidence. The fact that the volume, look at how low the volume is as it's coming down here. Nobody is panicking. That's a sleepy stock that I think is ready to just blast off again.
Yeah, I got to tell you, I may even go pick some up just for my own portfolio. This is the one that worries me because it could be back up to $1.50. You might be able to get a 60, 70, 80%, 100 maybe not, but you could get a big jump out of Nevada Sunrise, especially because it's tightly held and all that. And looking at the technicals, Alan, I got to agree with you. The bottom end of its Bollinger Band, the percentage D on the slow stochastics is non-existent. RSIs are in the 30s. It looks like something that could jump out of here. It just needs a catalyst, but it could go, that's for sure. Next up, you've got Rubicon Minerals, RMX, on the TSX. Trades at $1.55.
Yeah.
Looks like they had some news out today.
Yeah, my RMX had some good news. They were going through a court issue with one of the local First Nations near their project, and they got a good positive court ruling on that. Now, that's really not what I like Rubicon. Rubicon, I don't think they're going to have any problem getting permits to bring this into production. It was already permitted. They are looking towards the middle of 2015 to start producing on one of Red Lake's newest mines, and it's a super high grade. It's going to be a cash cow, and they're going to be one of the lowest cost producers out there by this time next year. In a stronger market for gold, I like that. They bottomed here and had a very good run. Again, even though it's given back some of those gains, it's not very dramatic, and I think it's in a good position to start getting more positive if we can get some upwards momentum in the price of gold.
Well, I'm looking at the technicals because the stock's trading at $1.55, and the 12-day moving average $1.52, the 26-day average, the 20-day average $1.55, the 26 $1.54, the 50 $1.58. So what does that mean? You've got that massive convergence right here, right below, right above, just above where it's trading. And if it breaks through those, it can break. So I like that as a trade. The technicals look like they're the MACD just starting to swing up. So that's a good trade.
Hey, buddy, you got to be sweating a little bit here. Are you noticing that the charts are all giving you those indicators that gold's going to go up?
Nevada Sunrise, the only thing that's making me nervous. Otherwise, the rest of them are nice, safe little picks. They're going to do okay. New gold, NGD on the TSX. 7 close. You're already down 0.3% on that because your purchase was 705. It's trading 703 right now. You want to just end it? You want to knock your king over?
No.
Call it?
No. No, not at all, George. So I'm going to look at this. This is what you call a cup and a handle. A very bullish pattern. Wow, these gold stocks all have very similar patterns I'm liking very much.
Either that or you've got some pretty heavy confirmation bias going, which is you only see what you want to see.
That's the problem with analysis, eh, George?
Yeah, you got to make sure you don't see only what you want to see. But
Yeah, but you're battling against me, and you're confirming what I'm seeing. So I like that sound. Yeah, New Gold's a great company. They're an intermediate producer. What makes they've got a great portfolio of projects. They're really well-run company. Gold starts moving. New Gold's going to go with it. George was right. This one's a little bit of a safe pick. I don't think I'm going to get a whole lot of downside to worry about on this one. But if we get good, strong gold prices, we'll see a nice gain on it. So that's why I picked it.
Safe. You may be picking it a little bit high. You know, if this has been something you would have wanted to pick, but you know, just a timing issue in the 660, 670 range. But yeah, you know, not a bad buy. Nothing I would run out and buy tomorrow. Nevada Sunrise is still to me your best one there.
Well, you said you were going to buy DNA too, and Nevada Sunrise, and you like the chart on Rubicon.
I like the chart on Rubicon, but not enough. But Nevada Sunrise, I think that's your slam dunk pick right now. I'm making the call. That's your slam dunk pick. That's your slam dunk. In fact, I'm going to put that right underneath that. I'm actually going to make a change here and I'm underneath slam dunk.
Okay, I'll tell you which
slam dunk GT. So that way, you know, I can make a call on yours there.
And I'll do the same. I'll try to pick one of yours that even though they kind of smell a little bit, I'll try to pick one of your doggy picks.
And last for you is a tech pick, BSM Technology. So if you've been watching Agoracom TV with Al and I, you know this is one of our favorites. And you're picking it here to GPS on TSX Venture Exchange. What are you seeing?
Yeah, you know, George, this is one that I just can't ignore. You know, again, it's a good quality company. They've been doing a lot of right things. The stock got broken. If you look past this, oh, sorry, I got to point to the right thing. If you look behind on this move, it started way lower, and it started 6 months before that. So it had one of those bottom left to top right type of markets for that stock. Then strangely enough, this company has been really good at leveraging the money that they raised, and they raised a bunch of money when it was up here, and the market didn't like it, and it's been sort of a broken chart ever since. But I am seeing signs that this good company that has a bad performance in the last 6 months, I think that it's bottoming out here. I really like what I see with the MACD. I like this kind of thing too when I see a spike on a green day. You know, good solid volume. I think what you're seeing here is the market sort of cleaning up what paper's left over from this big run. And so, yeah, I'm optimistic that, I mean, even if it gets back to here, it'll be a big winner for me and thump George. So that's all I'm worried about is thumping George.
I like GPS, love the company. I would have no qualms about buying that stock short and long, and just put in my account right now. As I have said on several occasions, at $2, it's a buy. I've traded a couple times this range. Sometimes I've seen these TSX Venture stocks that when they go flat like this for a while, you don't know how long they're going to stay flat for. They could pop, or they could stay like this for 8-9 months. So if I was buying this just to put in my RSP or my my TFSA. I wouldn't have any worry, next to no worry about it at all. But I'm not sure about what it could do in the next 2 months. It could pop back to 250, 260, or it could be sitting here right at 205 2 months from now. Just, you know, up 10 cents, down 10 cents, up 10 cents, down 10 cents. But good solid pick, though. Good solid pick. You know, it's tough when you talk about timing on such a short period, 2 months away. So it's not easy for anybody at the end of the day.
Yeah,
right, so
that's what separates the stars from the clowns, you know. And I want to be a star, the winner. I don't want to be like George and be a clown. Just having some fun there with the effects. All right, George, it's your turn now.
I'm offended. I'm offended, Al. I'm going to have to hand you an ass whooping now with that. All right. So here are my picks here, and mine are going to be very different. And you know what? People are either going to hate them or love them at home, but they're not the traditional ones they would expect. And it brings in elements from everywhere. But one thing you're going to notice is the only element it doesn't bring in gold. And I actually was considering buying DUST, Dust, which is the inverse ETF that goes against gold, right? So it's a bearish ETF, but I couldn't go that far. But I did want it. So here are my picks. We've got Omagin, OMAG. Now, this is a client of Agoracom, trading at $1.90. They've announced very clearly in their 8Ks that they are on the verge of signing with the government of Oman a monster.
Go through your picks first, and then.
All right. You're right. So Omagin, one of my clients. So I'll just say summary: real estate project in Oman, trading at $1.90. The next one up, RUSS, is a bear ETF, and it's an aggressive bear ETF, and I'm betting that the Russian stock market's going to go down, and because it looks like Putin's going to get more aggressive, and I like it at these levels here. Next one is UVXY. Now this also this is also a VIX. This is a volatility play here, and I think things are going to get very, very volatile in the next couple of months. Just because everyone's going to be back trading, it's going to mean a lot more if the Israelis are still in Palestine, if ISIS is doing what it's doing, if the Russians are doing what they're doing. So I think we get a pop out of the VIX. Rocket Fuel, FUEL, is a digital media platform. It's an electronic company at the end of the day. It's in the digital advertising space. Big clients. They've come off a big hit. I like them. Next one is El Polo Loco Holdings. That's LOCO. This is a up-and-coming restaurant chain, Mexican restaurant chain in the U.S. They've got 400 locations. They just went public 2-3 months ago. They've got earnings. Their first earnings report coming out in September. That's why I like them, kind of like a Chipotle play. And finally, I got a biotech in here, Mankind, MNKD, which also has a massive following on Agoracom, just by fluke. But they've just come off a big run, and I think I've got a good one there. So those are my picks there. Let me go into the chart. So. All right, so can you
George,
see?
You definitely went a different direction than I did.
Totally different direction. I've got real estate, Russia, volatility,
food,
biotech, and technology. If you can, all that in one shot.
Okay, time to defend your picks now.
Now, is this chart here on the right-hand side big enough for you to see right now?
No, bring it up more. Yeah.
All right, so let me do this here. Let me bring up the advanced. I'm bring it up right there, and I got to screen share that advanced, which looks like it's right there. All right, you see it. So you seen the big Omagin chart here?
I am. Yep.
All right. This is not a chart play at all. This is not a technical play, but I will give you an example of what this stock's capable of doing, because it's done it a couple of times. You see back here popped into the $5 range. Just a little while ago, it popped right here. It popped into the threes. It actually made a high of $3. It was close to $3. It's very, very. It jumps a lot when the market thinks it's about to sign this deal. And they've had a number. I can't tell you. My weakness here is that it's had a number of stops and starts. But in their 8Ks, and they're naming the ministers in Oman. They're actually naming the ministers responsible for times, calls, dates, signatures. So you can't get more specific than that. And they're saying that the signing is imminent right now. I'm going to give it 2 months, because if they do hit that, this stock goes $5, $6, $7. It's going to be a massive hit. So no technicals. That's strictly a fundamental play, straight up.
So this one, George, this one is the one that concerns me a little bit. If they get those contracts, this one could be a massive winner and really boost your portfolio's performance. But to be fair and to be quite upfront, These guys
Sure.
have been the boys who cried wolf for a long time now. They've been talking
Yes.
about these contracts for a long time, and they've sounded before like it's getting done, it's getting done, it's going to happen, it's going to happen. So yeah, that's my sort of positive and negative for that company.
I agree. This is definitely a go big or go home pick. It's definitely a go big or go home. Now, I don't think it's gonna fall out of bed. It's got some safety in there, be $1.60 to, but you're right. They may not get it done at the end of the day. So I am taking a risk, but I think that one's worth taking the risk. Next up here, you see this is RUSS. This is the Russian bear ETF. All right, so this is betting against Russia. It's a triple bear ETF, and you see what it's capable of doing.
So for
Just
those that aren't that experienced in ETFs, George, this one does the opposite of what it's a bear ETF. So the market goes down, this stock goes up.
right. That's exactly it. This goes up,
At
and
three times the performance. So the market goes down 20%. This goes up 60%.
yeah, exactly. And it's a bet specifically against the Russian market because it sounds like Putin isn't backing down. Even I thought he was going to back down after the Malaysian the airliner came down. Even if it wasn't his fault, I thought he was going to cave to international pressure to say, "Hey, you're the bigger boy in the region. You got to back down because this is getting, this is just spreading. It's not contained anymore." And yet he hasn't. Take a look at what it's done just going back to March. All right, it's gone as high as 25. You see quite a number of peaks here where here it went to 18, here it went to 25, here it went to 20, here it went to 20 again. Then we had this lull where everything, Russia, everyone was feeling good. Back into the Ukraine, right? Back over 14, almost $15. So I think this provides me with some decent downside because I don't see Putin all of a sudden becoming everyone's best friend, and I think it gives me a lot of upside. So the risk reward over a 2-month period there is not bad.
Now on this one, George, we've this isn't a news story, right? This has been going on for a while, and it hasn't had the greatest of performance. What are this MACDs looking like? I didn't see that.
The MACD is almost even. It's just slight. It's a minus 0.10, and it's the signal line is minus 0.09. So it's just 1/100th of a basis point underneath that. But the RSIs are picking up, and the slow stochastics are picking up, and that's what I like to see. And the downward momentum. So if you can see this here, the histogram, the histogram was pretty negative, and it started to make its way back. So it's decelerating. Its downward trajectory is decelerating. So I think it could be coiling here.
Okay.
All right. Next up. Listen, I couldn't go. The TSX Venture and the CSE is just so laden with gold stocks.
And Big Al, he's gonna carry it on his big shoulders.
Yeah, and I just couldn't. I don't know. I'm not feeling it for the next couple of months after watching what gold did. UVXY. This is a volatility. This is a play on the VIX. All right. This is a volatility ETF.
So in this case, George, it doesn't matter. You just want big swings in intraday, whether it goes up a lot or down a lot. You want up, down, up, down, up, down.
Well, the VIX is often called the fear index, which is if you when people start fearing what's going on out there and they want to protect their positions, both to the upside and the downside, right? So short sellers are afraid because of volatility. They'll buy more protection on the upside, and long investors buy more protection on the downside through puts. So take a look here at what happened just over the summer. So we had we're down here again, the 25 range, and look at that, 37. You're talking about a 50% move in no time at all. You're talking about in 2 weeks. And again, this is on my thesis that things are going. I just don't think we're going to have Shangri-La come September, October. I don't think ISIS is going to calm down. I don't think Hamas is going to calm down, even though they say they've got a truce for a ceasefire. We've seen that before. This stuff doesn't. and on the markets basis, the S&P and the Dow, they're really peaking right now. So it would. And September. Let me show you.
Can you go back a little, George, so we can see this time last year in your chart?
Yeah. Let me go back a year here. This is going back a year. Now these ETFs, look, it was up over 145, but that means nothing because they degrade slowly over time. They're not long-term things that you hold no matter what. You have to look at these volatility ETFs more in terms of what it does in short-term spikes. So let's say that might be more relative for you right there, Alan, where this is the 3 months. So you see here, up, down here, up, down here, up, and I think we're down here, and I see us getting up there again.
Yeah, I get the reason that you're calling for this. I think your seasonality is pretty good, but George, I gotta say, if you're just asking me which direction I think that chart's gonna go, it looks like it's got more downside. I mean, how less volatile can it get than it is right now?
That's the thing, right? How much less volatile can thing? I think volatility can only go up. That's all it can do here, and I think we got some. And remember, so my last point, I tried to finish there was, it's not just geopolitical stuff, but it's also the fact that you got the Dow and S&P really trying to break through uncharted territory, and they can't. And I believe you get a bit of a pullback. I'm not talking about a major correction or crash, but you're going to get a pullback. I think you see the S&P, it's trying to break through 2,000 here. It might do it, but you see it come back down to 1850, 1880, something like that. That causes volatility I need, and the way it goes. And September, October, everyone's got to remember, it's traditionally not a great time for the market.
There's a lot of volatility in that. You're coming out of the third quarter, that summertime period when things can get soft. There's a tradition why September and October can be weak months, and then you've also got this situation where right now I think the valuations on the market are pretty stretched, and so I think that there's concern out there of the bulls that, how much more upside do I have? So they start getting more worried if there's pullbacks, and it's going to be that perfect scenario for some volatility. So I get why. I think so far this is the one I would probably jump on board.
And Alan, I'll show you. You can see the stat here.
Yes.
So this is the actual statistical proof that September is the worst month of the year for the markets. This is the S&P return since 1950. All right. And on average, it's only positive 45% of the time, and it's down more than any other month. It has the worst performance. On average, it's down 0.5%.
Yeah.
All right, on average. So I think I've got some good stuff that's helping me out there.
Okay. What's your next one, George?
It's well reasoned here. So that was UVXY. Let me bring up. Let me bring this over on top so you can see the big one. Next one, Fuel. All right, this is a company in the digital marketing space, and I'll bring up the 6 month. They're in the digital marketing space. They took a massive hit when they had a couple of disappointments, but it's way oversold. In fact, I think you saw it on Twitter that I bought this at $14.60 and I traded it out at $15.40 or something like that. I did 1,500 shares in a few days. But great company. I'm a big bull in technology. You know that through my Twitter pick, and even you through your BlackBerry pick. But here I'm just seeing something that's that I believe is way oversold. You see the MACD has turned positive. Okay, minus 202 versus 232. And everything else, RSI, everything is just coming out of weak points. Look how they're but not far enough. You're talking about 41 and 35. You're talking about the slow stochastics, the percentage D. Everything is pointing up. Even the histogram here gone really weak. That's when I bought it for the trade, and now everything is starting to go in the right direction. So I like technology companies like this, especially when they're oversold.
There is an issue with that. Look at you're trading now at the top end of the Bollinger Band, and those Bollinger Bands that trend has been going down for quite some time now.
Actually, no, because the bands I'm seeing are 20. The top of the Bollinger Band is $22.39. That's what I've got. It's got a huge band here. You almost can't rely on it. See, it's got 1076 on the low side and 2239 on the upside. So it's you can't really rely on either one of those right now. But take a look at the convergence right here.
What I would say is that it better break that upwards band here fairly soon, or else you got more downside. That would be my call.
And that's entirely possible. This is a bit of a risk-reward move here, but technology just seems like all technology can't go wrong. Every technology stock technology is not one of those. Remember when Northern Telecom was ruling the day on the TSX, and that was all. But here you got Tesla, Twitter, Facebook. You got everybody shooting on all cylinders. Amazon, Netflix, LinkedIn, eBay, everybody is just moving. So
this kind of contradicts your other call, which is your volatility. The market's been going up with no volatility. Now, if in order to get some volatility, it's got to come down. What's going to happen to a company like this if the market gets hit in September?
I think technology, and I'm not being self-serving, but I think the tech stocks are operating their own world. Again, take a look at Tesla last year when I made the call, 41.50. It's 260. Facebook, I made the call at $47. It's a 75. I just think they're trading in another world altogether because people really understand that the race is on for digital dominance, and people are willing to pay a heavy premium, and they're not willing to part ways with these stocks unless they've got some kind of fundamental breakdown in the actual story. So I think technology is operating in its own vacuum. I'm not saying it's 100% insulated, but it's going to take a lot to bring down these technology names.
This one makes me smile.
All right, I like that.
It makes me smile because I think it's going to cost you.
Well, I know that this one's going to make you smile.
Oh yeah, there we go. Another one I can hack you on.
So this is El Pollo Loco. This is the next Chipotle, I think, and Chipotle, trades in the hundreds of dollars. El Pollo Loco is pretty strong, over 400 chain restaurants. They just came public. They had that. Here's what I like. And I've seen this pattern a couple of times. I've caught, and Alan, I've actually been able to take advantage of these. So you had a massive move off going public up into the 41 range, right? And then everything calmed down, and it just wasn't going to go below this $29, $30 range at all. So I think $30 is the downside, which is great. But they've got their earnings report coming out September 4th. It's their first earnings report. I got every reason to believe that it's highly unlikely that these guys were going to go IPO if they knew that their quarter wasn't going very well. That's just suicide, right? So I get a feeling we get a great quarterly surprise at the upside, and this stock ends up somewhere in the mid 30s, around 36, 37. I don't necessarily think it's going to pop back over 40, but I think we get a good 15-20% out of it. And the risk reward on the trade, either down to 30 or up to 36, 37.
I actually think that this one you could start testing that high if they come in with that quarter, and I think there's every reason to believe that they will come in with that quarter. The thing that makes me a little worried is it is an IPO, so you don't know how much the early investors are in for, or when their stock gets released and stuff like that. I'd have to check into that more. But the chart and your reasoning, I like it. This one's a toss-up between that other one that I said I'd pick out of your calls.
UVXY.
Yeah, I think I'll lean to this one right now.
Well, I like this one because it's food, and it's impossible to have. Tech, you can have a horrendous. Gold, you can have a horrendous. But food is food. People got to eat at the end of the day. And you and I both know fast food in the U.S. isn't going anywhere.
And it's good. So it's in that sort of better for you kind of fast food, right? Like a little more healthy. And I
I'm not
think that
exactly sure about that. I know it's. I'm not exactly sure about that, but you could be right. You could be right.
yeah. Okay.
All right, I guess the name El Polo Loco, and finally I've got Mankind here, which is a big stock on Agoracom. Has been for a long time, and there's the 1-year chart I'm going to bring up here. All right, this is this is in the biomedical space, and what I really like about this is they had a great run from the the mid-6 range right up here to just about $11, and that was over the summer. Then they had this big fall off, return back to earth. So from a technical point of view, I'm really liking it because you can see that the MACD has just gone positive. Again, you can see that RSI is trying. It's not quite making the upward spike upward move that I like it, but it's getting there. The percentage D on the slow stotch is looking really good here, and I know you're going to like this. Look at that histogram, okay? Terrible, horrible, 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 and then look at this. All right, so it's got a history of when it finally does go positive, it can make some pretty big moves on the histogram here. So I like
George,
it from a technical point of view, with the downside being 660 at the lower end of the band. I like it there.
Yeah, on this one, George, I don't know anything about the company. I don't follow it at all. I do see a couple technical things that you might want to take a look at. Look at there was about 3 or 4 months ago that the moving averages converged, and it picked up, squeezed your Bollinger Bands, and then it took off. Now, the indicator of where it was going to go once it came out of that inflection, you can look in the 3 months prior to that, and there was an upwards bias on the stock, right? Then it converged, and then it blasted off. You're seeing sort of the opposite now. It's been coming down for the last 3 months, and now everything is converging again. That would cause me worry. That causes me enough worry that I will say I'll go with your El Pollo Loco as my sort of pick of your picks.
That's your slam dunk.
Yeah.
All right, so let me close out this screen here, and let me make that change here so we can say slam dunk.
Yeah.
All right, and let's see how right we are about each. That's what I call the honest. Oh, by the way, before I go to the back to the my face and no screen, Twitter, our side bet for the Super Bowl. So here's your BlackBerry. All right, you got in on that at 9.59. It's up 6.62%. Well done, Alan. Well done.
Thank you, George. Thank you, George.
And here's my Twitter purchase that I was banging the floor at 44.06, up 12.7%. Is that a double off your relative performance?
Yeah, but like I told you earlier, George, the horse race starts when they let you out of the gate, right? And we just came out of the starting gate. This one, that Twitter BlackBerry battle is over on at the Super Bowl. So I got a long window there, my friend, and I'm still very. I'd double up on that bet if we were actually wagering money.
I'm telling you, Twitter gets to 65 for sure, as high as 75 by the Super Bowl, because we're entering Twitter land. NFL, NHL, NBA, all reality TV, all TV shows, everything is starting up. People are going to be back at home, and we know that Twitter is that third screen or whatever they call it, where everybody, Game of Thrones, everybody's on Twitter banging away. Can you believe that? Can you believe that Bob slept with Mary? Can you believe that they killed Joe? And you can believe the Dallas Cowboys lost again the last minute? And you know what happens? This is Twitter land. I'm telling you.
Through an interception.
Yeah, don't break my heart, man. But it's the first year I'm going into an NFL season where I don't have any hopes for the Cowboys. I mean, I'm going to watch them. Yeah, I'm a diehard.
We're in the same camp, buddy. Every year I remember thinking, this is the year we're going to win it again. This is the year we're going to win it again. And this is the year I'm not too excited about.
This is the first year I'm saying to myself, I think we missed the boat. I think we had the chance, and I think we missed the boat. But hey, the only thing that's got the Cowboys going, I know we're getting off topic here, is that they're in a terrible division. So they could just make the playoffs and anything could happen, but I still don't have my hope.
But then we got to rely on Romo, and you know, the thing about Romo is he's always got these great statistics, but you know, seems to figure out how to lose games with an interception at inopportune time. So, but
Don't remind
you
me. Don't remind me.
know, I'm not looking. I'm looking at my second team this year a lot
Hey,
more.
by the way, Alan, I'm just noticing that the sunshine is kind of putting this sash across me here. I'm looking rather royal.
Yeah, yeah, you might.
Are the sun gods trying to say something about my picks?
Well, if they are, I still got the title. So you see, I still wearing that crown. You're not.
But I got the sash going right now. All right, everyone. So, you know, it's Friday before Labor Day, so we wish you all a fantastic Labor Day. Hopefully, we've given you some food for thought. And we'll talk about our new format next week, but Alan's not going to be doing the show daily. Alan's going to be doing the show on Wednesdays, just to talk about what he sees and what he likes. And him and I are going to be switching the show from Fridays to Sunday evenings because we figure everyone gets a little bit tired. We'll do it once in a while on Friday. You never know. But looks like we're going to do Sunday evenings because that's when everyone gets amped up, ready for the markets the next day. So hopefully, like our picks.
Another thing that I'm trying to do, George, is you know, it all depends on, you know, trying to organize with management. But I really enjoy doing those interview shows. I think that, you know, what is exciting is I can find good companies and get the management on and not only hear about what their story is, but also get some insight into what they're seeing in the market. So I'm going to try and be doing, you know, more of those interview type shows where I organize that sort of stuff. And yeah, I'm pretty excited about the new format. We're going to have a lot of good things coming up here in the upcoming months, starting in September. And before
Roundtables, like it's kind of like roundtable would be Alan, myself, and 2 or 3 CEOs from one industry on Google Hangouts here, where you can see us all have a great conversation, high quality conversation that's timely as opposed to a daily thing.
Exactly, George, and I think that's you know, with the new show that I've done, I don't see it as being as exciting as the individual shows or, you know, these roundtable type things. One of the reasons that I even got into the stock market years ago, George, is first of all, I was one of those math whiz kind of kids. I really loved math, and you know, when I was 13 years old, we did the old Vancouver Stock Exchange actually had a trading floor still. We went on a field trip, and I got to see, and I went in there, I looked at the floor, and all I could see was numbers everywhere, and it was like I was in utopia for a math kid, right? But one of the things that always got me interested was Louis Rukeyser's show that he used to have.
Me and you both. Louis Rukeyser, my God.
I loved that Wall Street Week. I mean, I'd watch it before I'd go out on a Friday night with the pals and everything, George. I love that show. So I want to kind of do the similar kind of thing. You know, you and I are sort of the hosts, if you will, and then we're going to bring some good people on and really get their input into what they're seeing in the market.
Yeah, that's what everyone wants, right? They really want that intelligence. So we're looking forward to that. It's Friday. I'm looking through my window here, and there is nearly a car on the road. So no one's at work. I'm still here at 3:35. I'm cutting out. You're in Vancouver 12:35, so I'm not sure what you're doing. But Alan, have a very safe and happy long weekend because you're going to be crying for the next 8 weekends after this one. So I really wish you a good one because I'm telling you right now, I'm already up on you. Because now remember, I buy stocks that are much more liquid and much more volatile because they're in the U.S. with big volumes. You got your Canadian one, so all yours are at zero. You got one that's up 1.16%. You got one that's down 0.97%. So you're pretty much flat. One of mine's already at 0.55, 0.25, 0.63, 0.29. Okay. So.
But
you're going to be
just
crying
remember,
for the next 8 weekends, baby.
I have a strong memory, and this is why when I'm the victor, I come back and boom, boom, boom. And George, don't make the classic mistake of being the guy, like, you know, in horse racing, there's always, they call it the rabbit. The rabbit takes off, and his job is to go out there and try to stay in front the whole way. but it's very tough to do, especially when you got a horse back there like my picks, and it just comes charging and never stops. It's relentless.
All right.
You've
Let's see it.
got a lot of work. But before we end the show, George, if we didn't do our disclosure, George and I, well, I have no positions to disclose.
I am long Twitter right now. Okay, obviously, Imagine, as I mentioned already, is a client of mine. So assume I'm horribly conflicted. And I've got a long position on Twitter that I've announced very publicly over and over again. So I'm long those two stocks. But always assume we're horribly conflicted. Just remember something. Assume we are horribly conflicted. That way you always do your own research, talk to your spouse, talk to your financial advisor, don't follow us and do anything crazy. Hey, Ted Lazaridis is a BlackBerry. Assume he's my godfather.
George, I think that's good advice no matter what. If somebody has an opinion, I don't care what they're talking about, they're biased. They believe that their opinion is correct, so they're biased.
The best disclaimer in the world is on Zero Hedge, zerohedge.com, which most of you, go read the disclaimer. It's hilarious because that's what they basically say. They say, we don't have to disclose anything because we tell you we like something and assume we like it, assume we're buying it, assume we're mortgaging our houses on it. Why else would we say it if we didn't believe it? So, that's what they're saying. So, hey,
but regardless of whether you're biased or not, one of us is going to be proven correct at the October 31st. And that's Super Bowl, so
the guy with the section.
The pounding you took last time, I think, is you really gotta. I'd be licking my wounds. I'd be stitching them up and everything because I feel for you, bud. 47% in 6 weeks compared to 32. Now, 32 is a great number.
On Wall Street, you and I would be billionaires right now. They'd be throwing us money.
They'd bring the limos and they'd have the red carpet for you at 30-some%. But it wasn't quite as good as the stock picker with the crown. But it was an excellent job. Now you just keep that up and good luck. And
you said earlier that you have a great memory. Well, we don't need memories anymore because all we got to do is go back to YouTube, splice out this 2-3 minutes of who's doing the talking and replay that during the next one and say, Alan, let me replay your thoughts back in August. And just hit replay, buddy. That's all I got to do. All right, man.
All right. Well, everyone have a great long weekend. And as George said, do your homework, speak to your financial advisors, and we'll talk to you next week.
See you, folks.